Welcome back to the channel. Today I'm going to be talking about ISAs, which are a very popular savings vehicle in the UK due to their tax-free benefits. It basically means as much money that you can put into the account is effectively tax-free until you withdraw it, although the only limitation is the amount that you're able to deposit each and every year. So it's no surprise that it is a very popular investment vehicle amongst the public, and that is why this article today that I'm going to be reading through could be of some concern if obviously the government do choose to do this. So in the article we can see this. We've got the Chancellor has been urged to cap total tax-free amount Britons can save in ISAs at £100,000. Now this is a think tank report by the Resolution Foundation, and they estimate that the government could raise about £1 billion per year in taxes by capping the total amount people can save in ISAs at £100,000. Now this is obviously a concern because pensions themselves are already capped at £1 million, so it's a case of going, okay, we really don't have many investment vehicles here where we can build up significant sums of wealth. Now they mention here that the policy could direct more funding towards helping family with no savings at all, rather than continuing to benefit rich individuals via tax breaks. Now again, I would agree with this comment here because the premise is that undoubtedly the ones that are able to save and invest this money are ones that are already on a good financial situation, compared to that obviously of the families with no savings. They're not going to gain any benefit from these tax breaks because simply put they're not going to be able to save enough money to put into this account to even drive any material change in value. They say that there are currently 1.5 million people who have £100,000 or more saved in ISAs. Now that seems quite high to me. I didn't realize that that was such a high figure, but it says a lot. It says that, okay, of the current population of the United Kingdom, which is about 60 million, that actually quite a fair chunk of them do save in ISAs. I mean, at the end of the day, it's a percentage, but it's a higher percentage than I thought. Now, half that amount, which is around 750,000 families, have no savings at all. So they're going for this compare and contrast here, where they're going, okay, well, look at these rich individuals. They're able to save this much, and they're getting tax breaks from it. That tax money should be funded to obviously help those families with no money. Now, at present, Britons can save and invest up to £20,000 a year into an ISA, but there is no overall cap on how much an individual can accumulate over their lifetime. This report claims that Britain's current savings policies favour those who already have significant wealth. Now you can see here that I've highlighted significant wealth because, quite frankly, when you're describing someone with significant wealth, I'm thinking of the likes of Jeff Bezos, some of the richest people on the planet. That is significant wealth to me. Now, I don't think an investment ISA or a cash ISA is of any benefit to these extremely rich individuals because, quite frankly, they'll just pay the taxes with a corporation. They'll have very high quality accountants that will be able to give them favorable tax breaks anyway by using accounting policies that mean that they can almost manipulate their figures in order to be unprofitable and therefore not pay much at all in taxes. Now, this is a very complex area, of course, but there's no doubt that people do this all the time. You've got real estate companies that are constantly generating losses, private ones in that case, where they are constantly generating these losses so that they are able to obviously not pay any money in tax, but they can have a very positive cash flow which is reinvested back into the properties, and it becomes quite a good positive loop. But yeah, so it says here that Britain's current saving policies already favour those with significant wealth. I'd argue it probably favours those with a good income, but not certainly those with significant wealth. Those that are able to save and invest money, it's a great benefit for. But again, the other two sides of the spectrum probably don't benefit from it at all. Molly Broom, economist at the Resolution Foundation, said Britain is not a nation of savers. This lack of financial resilience has left many exposed during the cost of living crisis, with families having to build up debts and fall behind on bills. Government incentives to save do exist but are not fit for purpose, prioritising tax relief for those with very large amounts of savings over supporting real increases in the number of people with savings. Our myriad of savings policies are set to cost the government £7 billion next year as interest rates rise, with the lion's share going to rich households. Spending over £2 billion on those ISA savings of £100,000 while 750,000 families have no savings at all is not what a good use of Treasury resources look like. They suggested that the Chancellor can address both these problems in his upcoming budget by massively expanding help to save for low-income families and scaling back tax-free savings for already very rich individuals. Now, I disagree with this approach. I mean, I completely agree and understand that obviously you want to have a balance in the amount of wealth that you have, although in capitalist societies it's quite unlikely. So where they're saying here that spending, obviously, this should be redirected to the families with no money or give them useful tools, I think, yes, I understand the concept concept. I think that's a good idea. But scaling back the limit on these investment vehicles, I don't think itself is a good idea. I'm sure there is other areas where they can harness and increase tax here than really taking it from investment ISA accounts. Now, what they could do if they really wanted to stop this is instead of focusing on adding a limitation or a cap to the overall pot value that's allowed inside an investment ISA, because you need to remember here that investment ISAs will be taxed at death. Inheritance tax will tax 40% of that, so they're still getting revenue. So they're trying to make a trade-off here, or this article is suggesting the trade-off of introducing a cap, which means those that do invest in that ISA, that money, obviously, they're bringing tax rates forward now. So they're getting tax income now, but in the future, it could be drastically less when you think about the idea of inheritance tax in the game. I personally think by reducing the overall amount that you're allowed to put in annual deposits into an investment ISA, whilst not favorable for anyone that invests in that, would probably be the best approach. Now, imagine you've cut the £20,000 generous yearly deposit amount and you halved it. It's still going to be a significant vehicle, but it could likely help out over the longer term and really benefit, obviously, in those savings that they can then redirect to improve the help to save scheme. The help to save scheme, obviously, could be good, but the issue is here, those let's say households that have absolutely no savings at all and cannot put any money into these savings accounts, well, they're not going to use the help to save thing. And they mentioned here actually that it was a case of, let me just scroll down slightly. They said that basically the help to save scheme wasn't utilized that much, and they go as far to say that actually that 1 in 10 households actually use the help to save scheme. I'm trying to find it here on the screen because I try and remember it. Let's have a look. They say here that where people are able to save up to £50 a month and receive 50% top up from the government is the only savings policy targeted at low income families, as eligibility is determined by benefit receipt. However, take up is low, with under 1 in 10 eligible participants using it, suggesting that these people that don't have money at all, it doesn't matter if you make it more favorable, they simply do not have the money available in order to save this. So I don't think that would be a very good solution at all. But again, let's digress and let's not go into my whole political idea here on what could really fix the economy, because quite frankly, it's a waste of time. And if I go on about it for 20 minutes, 19 minutes of this video would absolutely be wasted. But it provokes the question, right? What if ISAs are capped or severely limited, where we are no longer able to utilize this as an investment tool? What can we use as investors, as savers, to escape this and do best as we possibly can? Well, it's important to remember what I spoke about earlier. Pensions, or self-invested personal pensions, SIPs, are also quite useful here. Now, they have a generous cap of £1 million. Now, this is obviously subject to change in the future, but could be an advantageous tool here, albeit the limitations being that they've got strict withdrawal criteria, being that of a certain age or significant health issues arising that mean you won't reach that age in order to spend it. So that could be a good tool here if you're looking to invest for the longer term. I'd also argue that a general investment account can also serve a good purpose. And you might go, well, hang on, Oz, wasn't the point of having an investment ISA in order to save on tax? Avoiding that tax would be a great, obviously, incentive. So why are you now telling us that perhaps a general investment account is worth considering? And that's because of the accounting policies that can take in place. If you have enough money where you're able to put a significant chunk of, obviously, your income into a general investment account, you can buy and hold for the longer term, then you can likely use this to your advantage. You could do things such as going, okay, you know what, my stock is currently down 20%. I'm going to sell this at a loss and reinvest. They call this tax loss harvesting. Now, in no way am I suggesting that you do this, but again, this could be a strategy that you could take into place so that whilst, yes, you are getting taxed on your, let's say, winnings, you are also able to take benefit from your losses. Because at the moment in my investment ISA, some of my investments that were down, I can't write off that loss. I have to sit there, soak it up and say, okay, I've lost a significant sum of my capital. There is now nothing that I could do about it. And when we go back to the idea here that inheritance tax is going to hit investment ISAs over the longer term, what can we do as investors really to improve this? And as I say, I think it really is a general investment account, hiring a good quality accountant, and obviously utilizing diversified asset classes. Going, okay, well, we've got a favorable, let's say, investment allowance here for dividend income. We're going to utilize this. Oh, actually, there's also an allowance here that involves property. Let's start investing in that. Alternatively, if you're so rich and you're able to just obviously leave the country, then you could potentially leave to a tax haven where you then have more of an advantage from holding obviously stocks and shares in another country. But again, there's a lot of risks associated with that, and you may or may not want to do this. So when we look at the likes of my investment ISA, which you can see here, my pot is down significantly since I began investing, and this would be a detriment to me if after all this time my investments were capped at £100,000. That's because if you look at my total level of deposits, I'm about a third, maybe even 4/10, 2/5 of the way there, which is quite a quick way already, considering I've only had an investment ISA, at least with free trade, for about 2.5 years. So that would be a massive impact to myself. So I, as an investor, would likely increase my contributions into a general investment account. And the reason I wouldn't put it into the likes of, let's say, a SIP or a pension is because I would like to have access to this money at an earlier stage. Instead, I would manage that general investment account like it is a business and look at it as if you can make profitable long-term trades. I say trades, long-term holds, where you hold it for many, many years. And it also, I think, would fixate you, and it means that you're less likely to sell, which I think can be advantageous in the situation that you want to buy and hold for the longest period of time, because over a 30-year period, the largest 500 companies in America, or the S&P 500, has generated on average 8% per year. If we can try and replicate that in order to get good long-term returns, then buying and holding over the longer term, having a good quality accountant, and being mindful of the tax breaks and availabilities that we have would probably be a good investment strategy going forward. Thank you for watching. Have a fantastic day.